The most important point that Malavan has stressed is that really participate. This is a discussion, so we're all professionals and we all have very interesting things and experience to share. And that's meant to be very interactive. Thank you very much for joining this afternoon. So we're going to talk about the FinCEN files. I'm sure everybody's heard about them in the news, in the media over the last couple of months. So just a little bit of info about myself. I've been working for 30 years. I started a long time ago doing some fraud investigation and embezzlement cases, which I really enjoyed, sometimes so not so. And then I moved on to compliance, risk management, and over the last 3 years, I became a freelance advisor and consultant, mainly in matters of financial crime compliance and risk management. I've been advising. Also, I'm a non-executive director. I work mainly with fintechs and regtechs, but not only. I'm also working on for compliance, but with companies which are with a purpose, we say, so in green energy projects or projects with a very strong ESG agenda. And so that's really what, my passion is really about combating financial crime, because I think there is still a lot to do in that space. And it's only by, sharing best practices that we're going to be able to lead the way and raise the standard. So thank you very much all for joining. I hope you will enjoy this session. So let's get started, and don't be afraid to interrupt and ask questions. Right. So I think we've gone through the housekeeping. Thank you very much, Malavan, for saying a few words on that. So first one is really a poll. And I would like really to ask you the first question is, how many of you were surprised by the revelations of the FinCEN files? Was it a real surprise to say, oh my God, not aware of what was going on? Or especially if you maybe on compliance function, then yeah, I know what the story is about. So let's see. So it looks like most of you, I don't know if the other ones are going to, not everybody's voted yet. So if I count myself, I wasn't so surprised, but it looks like most of you were surprised by what came out by the FinCEN files, what was revealed in the FinCEN files. So it's, it's interesting, but if we're looking, sorry, what's going on? If we're looking at the numbers, the sheer numbers of, of what was at stake, we're talking about SARS, so suspicious activity reports that were filed with the US FIU, FinCEN, and they were totaling about $2 trillion worth of transactions. These reports were made between 2000 and 2017, so fairly recent. And we're talking in excess of 2,600 documents, including 2,100 SARS. So we're not talking about just a couple of suspicious activity reports or documents or hundreds. We're talking about, more than a couple of thousands. Now, I'm going to stop sharing my screen and, just talk a little bit more about what we, what I would like to hear from you is, what was the aspect that was most surprising to you? What came out that you thought, wow, that is a really shock to me. I wasn't expecting that. I wasn't suspecting that was happening. Who wants to share their, their feedback and what aspect in particular was surprising to them?
Yeah. Hi. Hello.
Yeah, I can hear everybody.
Yeah, you can hear me. I'm Shami.
Yes, Shami.
Yeah, for me, the thing is like the very much shocking, I would say, was the recession, which I never heard of. At the time, I was doing my MBA, and I was just like I just passed out at the time, and I heard recession hit, and I was not knowing what was recession at that time. I just know what was recession, but what it actually looked like and what it is like the impact what it was. So I would say that was a very much shocking part of my life to know the recession, and then what were the banks were involved and why was the recession hit. Yes, that even now I really worried if someone says even again the recession has hit, I would feel, oh my god, now something is going to happen very bad. So that is what it actually impacted me a lot. So I would like to say the recession.
Okay, thank you for
Yeah.
sharing.
Yeah, and can I can I say something?
Of course, yes.
Okay, first and foremost, what is surprising is that since the last 3 years, these SARs have not been investigated, right? The ones which have been leaked out. You're talking from 2017. So that means since the last 3 years, these sensitive documents have not been investigated.
I'm not sure. Actually, they were not leaked. But so it doesn't mean that they were not investigated, because banks continued in 2018, 19, and this year to file suspicious activity reports. It's just that the leak of the documents and information was prior to 2018.
Okay. So in principle, you're saying that there's a different story behind it. That means.
I would say that mainly you're talking about SARS. They're not necessarily. I mean, what are SARS? They are suspicious activity reports. They're not necessarily wrongdoings by whoever you report to the authorities. But what banks know very well is that, and they're not necessarily evidence of wrongdoing by themselves. So they should raise investigation by the bank and also by the authorities. So I think the file really shows that, for instance, Deutsche Bank flagged about $1.3 trillion. JP Morgan, it was about 500 billion. Bank of America, 384 billion. Bank of New York Mellon as well, were the most prominent bank that appeared, whose name appeared in the leaks. Now, what is important to understand as well is that once a bank has filed a report to the authorities, it's actually very difficult to prosecute the bank or its executive, even if it carries on helping with the suspicious activities and collecting the fees. So it's actually, so it's actually quite like an out of jail card for them. No, let's file a suspicious activity report, and then we're sorted. Right, so that's one of the aspects. So I think one of the aspects that was really maybe surprising is that many banks didn't really act upon filing a SAR with the authorities.
On time.
And on time.
On time, yeah. Exactly. They failed to do so, yeah.
Exactly.
And they actually, what I was I understood is the bank also need clients. So they feel like the fine is less. If we are making the more profit, then fine, let's pay the fine. Even many banks have neglected the aspect like this also. So I feel like banks are involved. And moreover, any individual officer, whoever is working, I don't say many banks they're told to do so, but they say clients are important. So if anything like that, we can try to rectify it. So that is what I experienced. I'm sorry.
Yeah, I mean, that's absolutely. Yes.
I think FinCEN files by ICIJ, they investigated and revealed that how the financial system is failed to approach and the conduct through investigations, basically politically exposed persons and the PAP and FPEP are involved there, but still they are carrying the activities through the different financial institutes. That was a major cause that by ICIG when we released these files, and the whole financial system was shocked. And how financial system, how they are facing the this failure to comply with the, that was the basically financial system was shocked. What I gone through the study, and normally, by the training sessions, what we had in-house training, and by the senior head of compliance. So these things basically giving us, we call the red flags, that how we can protect our institutions and how we can bring new policy and procedure, and based on ongoing and periodically investigation the transactions, are taking new clients on board. Basically, see, the corresponding banking was the basically main hub of this by ICIJ when they relieved this relieved all the FinCEN files. So I think in future we are not going to see this again, but we can't say that 100%. Yeah.
Yeah, I mean, we'll look into, what's next, and we can share views as to, and we can see already what's coming up in terms of changes in behaviors and changes in regulations. But yeah, we can talk about that in the second part of the hour. Just to pause there, and I don't know if everybody is familiar with suspicious activity reports, but just to illustrate what it looks like, for FinCEN as an FIU for the US, this is what it looks like. So on the left-hand side of the slide, you've got, what is being filed as a SAR, and this is what it looks like. So you've got a fairly large number of information on the file, right? And many, I mean, all jurisdictions would have an FIU with which they would file suspicious activity reports. Most of them, and especially, I mean, here in the UAE, and I'm sure in other jurisdictions, there are even, you can upload, you have through API, you can upload it through an e-portal. It's very easy to do, a few clicks and it can be done. On the output side, so that's what that's what you send, that's what you share with the FIU. On the other side, the FIU as well, well, there are some outputs or outcomes of or there should be some outcomes of, the inputs that they receive. One of them, as you may know, is the FIU annual review. So they usually produce an annual report that is being shared with the compliance officers. No, normally it should be shared with the compliance officers so that they know the trends, and they have, internal information in the country of what were the main events, what were the trends, just to share information among the professionals in compliance. So that's one of the outputs. And I really invite all of you compliance officers to actually review these reports and see whether there is any learnings or any tips that is interesting to share among also internally within your organization. But
I have one question here, like, the current, like recently, what reports comes out, like the number of SARs, number of STRs, which is risen by the financial institute to regulators. They are basically, numbers are in millions. And, what are under investigations are in hundreds. So that makes,
yes.
Yeah, numbers are in millions. And when one of enforcement agency like NCA, National Crime Agencies, one of their trainers, when they trained on FinCEN, like, specifically on STR, he answered, like, we are receiving, like, you count 1, 2, 3, 4, 5. If you count until 1 million, it will take you 2 years. And if you count for 1 billion, it will take you 25 years. So imagine that how many SARs or STR we are receiving on daily basis. We can't go through. Yeah. So and the point is, like, financial institutions are forced to rise SARs or STRs through systems. So when it comes to input, like, they have output is there, but no, they are not receiving the input by the regulators. So and they are, like, risk indicators are rising day by day. and they want to continue with the business or with the client, but they have risen the STRs to the regulators, but they are not receiving immediate response. That means that risk indicators are increasing day by day. So end of the day, if they force to penalty or they force to close or shut down the account, that is really difficult to take a decision on that time. Yeah.
Yes, I think.
Hello.
Hello. Saying this is we're talking about millions of SARs being raised to FIUs. The level of the number investigated is actually in the hundreds, and the number of convictions is actually in the dozens. So you're right. I mean, the conversion from what is being raised to the FIU to actually what convictions or what wrongdoings are actually in terms of fines, in terms of asset freeze, is very, very low. So there is a problem in the process. And I think to a large extent, the FIUs have set themselves for failure because they don't have on their end, they don't have the resources, whether technology or people, to actually deal with such volumes. Now, they've set themselves for failure, but we will see a little bit later that it is also the fault of the banks. Because again, as highlighted before, if you file a SAR, it's an out of jail card that you buy, right? And it's an easy one. It's too easy to press the button and send and raise a SAR, because then you're protected one another. So we will see, but that is very likely to change.
And Mohammed Rashad would like to ask a question. Mohammed, please go ahead.
Hello.
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 Yes, go ahead. Yes.
Yeah, actually, it's not a question. Just I want to say something about the previous talk about the raising to FIU from a financial institution. It's like millions or something like that. I think this one, when financial institution raise that much STR or SERs, that means they are not investigated well. They just release the responsibility for investigation to FIU. Because if they make real investigation, it will not be that much. So more STRs means they are not investigated well. Maybe there is some things related to business and operation and anti-money laundering like that. So instead of reduce the business or something like that, they will only do the business and raise the cases to financial institution. That's it. That's my opinion. I don't know, real or what do you think?
I think to some extent, yes. I think you're right. I think there are many different factors that explain why the whole process of raising SARs is not working. And we'll see. I mean, we're going to see some changes on the regulator side. I mean, even FATF has announced, this year that it's actually losing the fight against financial crime because what they have set up is not effective. So, when you're looking at the outcome,
yes,
we're looking at the outcome in terms of, FATF recommendation. Yeah, okay, so we're doing the mutual evaluation, or we are effective on all of these recommendations, but not on these ones. Actually, at the end of the day, when you're looking at the financial crime levels, they're not really decreasing. I mean, or maybe they become more visible, but it doesn't look like, it looks like we're just, tackling the tip of the iceberg, that we still cannot really get into the meaty part of the issue. So, there's going to be some overall major changes in the next year and couple of years.
Can I ask Anne, please?
yeah, by seeing the.
Sorry, go ahead, Shamim.
Yes, Dan?
No, Shamim is fine. Go ahead.
Shamim?
Yeah, no, I was just, fine, please go ahead. I was just telling, what you're saying is right, because by seeing the technology, the artificial intelligence, everything, yes, maybe in near future, we'll come back to this everything. So I just wanted to say that, that's it.
Thank you.
And the FATF was set up in Paris 31 years ago, and about 20 years ago they added an anti-terrorism remit. Are they admitting that they've lost, that they're under resourced, they're under technology, they're literally losing the race, and they're not really blaming the banks? So who's at fault? I actually blame the governments. So we'll stop there.
Well, you know, mostly the whole system relies on the banks to be the policemen of the world for whatever money flows.
Yeah.
And the government have really handed over the responsibility to the financial system. So
that's an abdication on government to allow regulation to be not light touch, but just lacking in, it's kind of a carrot stick thing. And I think the whole global financial architecture with technology as the backbone, as the foundation, given the lack of interoperability and digital identity and the ability to open and close accounts at the speed of light, by the time the SAR, it's actually looking into the past. There's no forward thinking going on here. And I'm looking forward to the rest of your slide deck.
Yeah, you're right, but that is not only affecting financial crime risk. If you're looking at risk management, too many companies are actually looking backwards and they're not proactive enough. I think for financial crime, all the stakeholders need to really raise the bar and review. And I think FATF has actually realized and admitted that they're focusing more on the format and on ticking all the boxes, as opposed to really looking at, does it make a difference on the actual level of financial crime? So I think it's when they've made that difference, you know, the objective is not met, and therefore, well, we need to do something different. Whether at the bank, on the banking side, whether the FIU, the governments, the international guidance, needs to be something different done. I would like to run another poll. Just for, and I think I've got some idea here of what you've just said, but you know, most of you were surprised. What was the most shocking? Because I think there were a number of very shocking revelations there. Was it the lack of appropriate response? Whether the large FIs actually do not seem to take FCC seriously after all the fines that they were subject to. You know, do they really take it seriously? Are they really paying attention? The size of the amounts involved, or the global nature of international money laundering. I think the last one is obvious, but you know, these should be part and parcel of what we're facing off to every day. But what was it? Yeah. So I think you know, from what you're saying, I mean, we've got a bit of all, and I think probably all of them were shocking. But you know, the fact that some of the biggest names, some of the largest banks were actually involved, and for significant amounts. I mean, really significant amounts. Just to give you some ideas. So. HS and the reputational damage that, sorry. So the largest bank accomplice of criminals, these were all the largest banks that came up in the FinCEN files most often. We're talking HSBC, Bank of New York Mellon, Deutsche Bank, Standard Chartered, and JP Morgan. Altogether, you know, the amount at stake are enormous. The fact that, and in various ways, I mean, it was not just, you know, drug trafficking as a predicate crime, or it was so varied. The way the banks helped criminals, passively or actively sometimes, was actually very shocking. And not only once, but even when they were raising SARS, they continued with their bad practices. And I think that was very shocking.
I'm noticing HSBC and Standard Chartered that run at least 80% of global trade finance. And this is at the heart of the problem, which is the manual light touch of correspondent banking. And I think that's the heart of the problem. Correspondent banking and trade finance. I mean, I live in London, I'm based in London, and it's the criminal underworld capital, and it's shocking to admit this, but these are the facts. And until end-to-end, straight through digitization and automation, the compliance is just dramatically not at, it's a shocking state of affairs.
Yeah, it's under-resourced in many ways. And the volume of transaction and the size of the transactions are not getting lower. I mean, maybe this year with a little bit more, with the crisis that we've encountered, maybe there has been, lower level of trade. It's just hopefully a pause or a blip in the trend. If you look at the trend, the number of transactions has been on the rise. And you're right, trade-based money laundering is still by large, and trade finance is still by large very document, manual verifications being done. So a lot of improvement needs to be done in that space. But I think as well, the culture of the banks, even after 2008, has it really changed? I mean, are people really paying attention? Are they really keen to abide by the code of conduct and really combat financial crime, or are they still eager to just running after the profit? So I'm not sure the culture has really changed even post 2008. And I don't know. I'm happy to have your views as well. But from what I've seen, some banks have changed. The culture in some places have moved to a better place, but this is still not enough being done. But we can see the reputational damage. I mean, if you're looking at the financial institutions, the jurisdiction, then the regulators, it has done a lot of damage. And that's why as well FATF and a number of regulators are now saying we need to do something different because it's not working. Share prices have been falling for, whether it's for Standard Chartered Bank or HSBC. I hope you're not holding banks' shares. I sold mine a long time ago, but I hope you did as well. But yeah, no, just the I think Standard Chartered Bank's share got down to 3.5 GBP. So it's not when it was more than 7 a few years ago. So it continues to be affected by financial crime, fines and wrongdoing and behavioral and conduct issues. Very, very much. So when you're looking at, when you're looking at I like to open up discussions from the FinCEN files and from what we've just discussed. What are the main learnings that you feel is appropriate and you would want to, take up and address in your organization or even discuss with your peers? What would you say would be the key learnings and therefore what you're going to do?
Well, I think the one organization that really needs to be front and center and also take responsibility is the organization owned and governed by the banks called SWIFT. They have a lot to answer for because they can't point the finger any longer. They're doing APIs and platforms and all, they're spending a lot of money, but the results are not there yet. And, maybe blockchain, maybe some of the DLTs answer this, but the investments are not there because there's too many grubby, corrupt middlemen, and the bonus culture in these institutions has not gone away. As you say, Anne, we've not really moved forward culturally from the big bomb of 2008. Hopefully COVID accelerates the digital conversation. And these are not quick solutions, but I think the stakeholders and the roundtables and the committees need to stop looking at these gentlemen in three-piece suit and think that they're clean and proper. I'll stop there. I'm getting a bit too mean in my commentary, I think. But SWIFT are a big part of the problem.
Alors, it's interesting what you raised, because I got a survey. I was sent a survey to respond to, and that was coming from ACA ACAMS, yeah, the ACAMS institution. And one of the question was, do you think we should put more burden, more regulatory scrutiny and burden and obligations onto the payment service providers and onto the software, so like the RegTech companies or the software providers that are actually providing AML software solutions. So, you know, the likes of LexisNexis, Fenergo, and so on, a Compliant Vantage, et cetera, And that, I thought that's an interesting question, because, and I think what you're just saying, so we've got the SWIFT and the, you know, payments providers or payment services companies or that are not regulated or are not maybe playing their role in combating financial crime. And I think you're right, because by putting only the burden on banks, we can see that that's not enough. So if we actually put the onus, all of the actors, we might actually get to a better level. And I thought, interestingly, the survey came, I responded to the survey yesterday, and I thought that's an interesting point, because that may be what they have also in mind and what's going to come next. Would you be surprised about that?
Of course. I would like to say, like, I just want to say, like, you know, the swift action, what you said, if any client whoever is coming to open an account, like, you know, the first thing what the bank does is it's seeing the net worth and all. Most probably the main thing what I would say is whether the person whoever it is, whether he's a PEP or no, because PEP itself it's like he's holding something, like, you know, where he'll be having his hold, or else his existence, or else his partners, or else whoever the beneficial owners are, or else if any entity which is coming for us, like opening account like a trust. So there itself, like, you know, we can be a bit suspicious on those things, because money can channelize with that a lot compared to any other regulatory banks, whoever the other things are coming. They're anyways under the scrutiny. But this trust, the political PEPs or the relatives of the PEPs, and moreover, these are the things, like, you know, which we cannot take it very lightly, because it is only the thing which has a lot of impact on the banking sector. Like, you know, if you say the insider trading, if we say like a big trafficking goes on, if we say the shell banks which are opened with the name of somebody else. So if a very basic step, if we be very alert at the time of onboarding, then I guess 50% of the thing is being done. If we are very much, like, you know, very swift acting. If we take very lightly, if we have just onboarded only because we are having a client, then that itself we are losing it. So I would say, if we are very much keen to know what the person is, what his business is, whoever is, wherever is related to, and whoever the owners are, so their half work is done. That is what I feel.
So you're absolutely right, and
so,
I think the UK. Yeah, the UK has unveiled plans to reform its register of company information very recently, because we've seen that with the fifth MLD, where, you know, you're going to have to disclose companies' registers, national registers. Yes. Companies are going to have to disclose 25, you know, any UBOs with 25% or more interest in a company. Yep. Now, that's only for the EU, but I think they are actually showing the way. And that, you know, if I'm looking at the UAE, we've got over 40 different registers, because we've got 40 free zones, and every free zone has their register. You're talking about a country which has got 10 million people, 10 million individuals. You know, I don't know how many companies, but you have thousands and thousands of companies. And you have 40 different registers with varying degrees of information. I mean, some of them, publicly, you can only access two information: the name, the legal name, and the registration number. That is it.
Or the address. Yeah,
I mean,
registration number. Yep.
It is not good enough. So I think a lot more, and the UK has definitely made that announcement recently, that they need to reform their register of company information, and they're not the worst by far. But I think there is a huge improvement on the governments to actually establish these registers and make sure that they are easy to access and easy to upload documents, upload documents from or verify documents against. At the moment, not. And I think it makes as well the life of the financial institution extremely long, cumbersome, with all the customer experience, crappy customer experience that customers have to bear with. And banks and the governments really need to raise their game here. I don't know if what are all the learnings, or what do you think is going to come next as a result of these files?
I think I think we need to move beyond know your customer and know your business and get granular to know the transaction, this KYT. And actually there are vendors, there are startups, there are full platforms. There's I think a lot of this is happening in the Nordics, like places like Sweden and Norway, where they actually can get to not just the account information, but the transactional data. And that's, as you say, Anne, going back to the big networks, the big payment service providers, because most of this activity happens cross-border. It doesn't happen within a domestic marketplace. Domestic activity is pretty airtight, but the fraud happens when it goes across jurisdiction. And so I'd say on top of that, the regulators really need to get collaborating, because the regulators seem to compete more than collaborate. And that makes zero sense to me, because they're the ultimate arbiter referee in this sticky, thorny problem. And the final thing is, if I've learned anything from crazy COVID, is we don't have digital identification. We're still living in a paper, manual, analog world. And you can't always blame banks that sit on legacy systems, because they can't even get at the data in real time, which is so important.
Agree. Very true. I mean, here we've got a brilliant example of, you've got DIFC with the regulator being the DFSA, and then you've got ADGM with the FSRA, and then you've got the Central Bank of the UAE. So
and they don't talk to each other. It's crazy. And even in the same market. So
same country, they don't align with each other. And then you've got the Central Bank of the UAE issuing cabinet resolutions that add to this or add to that, and it just makes things so complicated for banks.
They're playing darts blindfolded and trying to hit the bullseye. It's impossible.
Yeah, so I think they need to really act differently. But I would very much agree with you, because imagine SWIFT and the intelligence they have in their hands on transactions, on cross-border transactions. What are they doing with it?
Well, I don't have the answer. I don't think they know. Sorry, that's a bit mean, but I'm not sure they know what to do with all that. It's actual information. And of course, the banks don't want to share, because it becomes a competitive issue between HSBC and Standard Chartered, because they don't want to lose their customers. And of course, at the year end, they don't want to lose their bonuses. So the cultural greed of the bankers themselves, I think, is the most difficult thing to change.
Yeah, but you're getting to the point I was making earlier. Is has the culture really changed? No, because the remuneration system has not changed. The incentive
bonus culture. Yeah.
So another point I would like to hear from you is that based on your experience, so reflecting on what you've faced off so far, in your FI, or what you know about, not necessarily in your FI, and maybe in previous experiences, what is the area where we could get better? So we've talked a lot about governments and regulators and what they can do better. Now, looking introspectively in what banks are actually doing proactively to make the process of the SARS better. I mean, there's still some learnings and some improvements that banks can do and FIs can do. What would these be? So you've got the quality of SARS, which is raised, the quantity of SARS raised, the actions following raising a SAR, or internal SAR, or an external SAR, of course, or the internal process for identifying and raising SARs internally. So what are these? There are other points as well that you could make, like the timeliness of raising a SAR. I think was one of the big question and big surprise coming out of the files as well. But out of these four, what do you think would be probably the highest priority with what your experience has shown you? Okay. Right. So it seems that actions following raising a SAR is, together with internal process for identifying and raising SARs, are the two ones that make the most of the concerns that you are aware of. And I would say, yes, I think one of the learnings from these files is that there was, apart from raising the SAR and finding it, it's like you're out of jail card and then nothing happens. So, no trigger reviews for the customer being done, or not on a timely basis, not actually raising the transaction monitoring rules or adapting the transaction monitoring rules. So all of these should be actions that should follow the raising of a SAR. And definitely, maybe some of these suspicious transactions are not being identified early enough due to a lack of, is it communication and training of all the frontline staff? Is it because the procedure or the process for escalation to the MLRO and compliance officer is not established clearly? All of these are something that FIs, in my view, can have a look at and get better at. Now, interestingly, no one thinks that the quantity of SARs raised is an issue. Now, I don't know if you're aware, but in the UK recently, actually, it was I think they made the announcement last week. The NCA has called for deeper reform because they have since the FinCEN files, they have experienced a large increase in the submission of SARs. And therefore, I mean, as much as 20% on the previous 12 months, 20% increase. I mean, this is ridiculous. So already the FIUs are having a problem with dealing with the SARs that they are that have been being raised normally.
That's an admission of guilt. I'm sorry. It's just, yeah. Just...
But 20% is like, oh, let's raise anything and everything. So I believe that there's going to be, and we've seen that. We've seen examples of banks. I think from memory, it was Morgan Stanley who got fined because they were raising SARs when there was no valid reason for raising SARs, and they were submerging the FIUs with hundreds and hundreds of thousands of unnecessary SARs. They got actually fined for that. I think that was last year. Now, I think we're going to see more and more of that because, it's like an auditor. If you give him files and files and files to review in a small amount of time, they can't do the job properly. So I think there's going to be more and more banks being fined for that and being pinned for not doing it properly. So the quantity is absolutely an issue. And I think it's the right quantity. So to really raising the SAR that should be raised. The question is, do you think the MLRO are actually looking enough or investigating enough on suspicious transactions being raised internally before they raise a SAR, or are they very quick in raising it and say, I don't have time, I'm just going to raise it anyway?
Yeah, this is what happens.
Yeah.
They just they don't consider it what is serious.
Okay. Why is that? It's because they're scared and they say, oh, I'm going to raise it anyway, just in case? Or is it because they don't have enough resources? Or is it because, why?
Yeah. I would not say all the MLRO, but I would say some people, they lack in the research, and they feel like a small suspicious activity also, they feel, oh, it may be a small, but if we leave it, it might be big. So like that, they just evaluate it and they just update it. That is what I think. Like they don't see the seriousness, but they don't see the FIs will be having many cases to be dealt with because if they come to know the small things, again, as you told, the fines, everything. So the MLRs should be very seriously and strictly follow the procedures to find out the exact suspicious activity reporting rather than just updating anything.
And also the siloed nature of compliance officers and money laundering departments. They sometimes think that they're the police of the bank and they handle it internally and they say, oh, I'm gonna get promoted if I can find the bad guy. So they go on their little rogue investigation and they don't even put the SAR forward because they're bored with just ticking boxes all day and they want to turn into superhero. I want to find the bad guy. I'm on a mission now. And that actually is bad because they're not sharing actionable data. And so the person, and then they're not managed well. And then, that you become these little rogue operator inside a big bank saying, ooh, this is cool. I can plot the money moving from X, Y to Z and I can pull in the money trail and then I can get on a plane and find the bad guy. It almost turns into virtual reality to no end other than to stroke someone's ego to get promoted at a bank out of this ticking box exercise of money laundering and compliance. And that's a huge problem because they give up because they know the system is not really working. It's almost, you know what I mean? So I think that's, again, back to the psyche of the person that's either filing these SARs or responsible for managing financial crime in an institution. And they're often just stuck in an area of a bank that nobody pays attention to until the bad press turns into the FinCEN files, right? Cool. So this too shall pass. It's like a bad storm, it just goes away.
Yeah, I think you're right. I mean, it raises the questions whether the role of the MLRO, the responsibilities of the MLRO, and not only what is expected, but what kind of fines and liabilities they can come under is disproportionate. Is the balance correct here?
It's big. It doesn't match at all.
I would say they should be well trained actually. Like, to just reporting everything, they should be well trained. That is what I feel.
And I have something to say here.
It comes with the liability as well. In some jurisdictions, they are protected. They can be a whistleblower, they will be protected, and they'll actually be granted millions. In most jurisdictions actually of the world, they prefer to resign, or they will be sacked if they do something that is not in line with what the banks wants to do. And so there is also this kind of, as Dan mentioned, I think, is this imbalance between their responsibilities, their liabilities, potential liabilities, and what their role actually is. So I think it's very disproportionate, and I think it should be addressed as well.
Yeah.
Yeah. And I have a few suggestions here.
Yes.
What I feel is that these are suggestions from my side. What I feel is that the compliance officer of the institution should have a reporting line to the board. Now, these SARs which you're talking about, there should be an internal SAR prepared first. And then you need to have a team to investigate those SARs before filing it to the FIU. So that means internally itself, the institution has to shortlist the valid SARs, and only those SARs should be submitted to the FIU. And post that, there should be a follow-up procedure also. You have to follow up. The compliance department has to follow up with the FIU and get a response on their SARs. Yeah, so that's the only way they can take a quick.
The problem is the FIUs are not tooled to respond to every single SAR being raised. Yeah. So many of them. And also, I would raise the point that in theory, the governance should be that the MLRO, or at least the compliance officer, should have a direct reporting line to the board. So that's an obligation by many regulators, and many governance regulations in many countries actually requires that to happen. And I think it's anyway best practice. The second point is that the reporting of the SARs and the number of SARs has to be made visible to the board as well, to the Risk and Compliance Committee, but also all the way to the board. So that should be part of the MLRO annual return, and it should, and the MLRO annual return is presented or should be presented to the board. So that's another aspect. That, the board should have full visibility.
But banks don't often separate risk from compliance, which is the problem of governance, right? So it's the GRC conundrum. And oftentimes they're put in the same bucket, therefore there's no differentiation, and you can't make a decision other than, oh, we don't, you know, it's so, I think there needs to be a line at the board level between risk and compliance, and often there isn't.
Agree. And you're right, and it's two different disciplines. I think compliance has actually needs this direct line into the board.
Well, risk is usually higher than compliance, and I don't agree with that, so, yeah.
No, they should be two separate.
One is much higher in terms of how banks view that. You know, protect the license, but let the bad guy get away with it. Sorry, that was very cynical.
No, that's less. Just to highlight, I don't know if you can see my screen or not anymore. No, you are. I'm screen sharing. So, you know, this is the number of the UK NCA, so National Crime Agency. They said that, you know, there needs to be a radical rethink of the SARS regime. And if you look at the numbers of reported files, it's really, you know, it's a huge number. And not mentioning that since then, and since the FinCEN files, these have actually gone up by 20%. So, there's no way they can actually respond to every single SAR raise. No way. I would like to wrap up and just maybe some takeaways. You know, wrap up what probably most of the points that have been discussed to date, and how we can get better into raising of SARs. So obviously the quality of SARs, paying attention to the fields which are being populated, because that will help the FIU as well to have a proper analysis of the transactions, and, you know, confirm with the data and ensure that it's not tampered with. So, you know, whatever we put in the SAR is actually the accurate information, and that we don't concede information when we raise the SAR. Appropriate reporting, so we're talking timely, not too many, but not too few either. So having the right balance, we report what needs to be reported. Obviously, we've talked about trigger internal actions. The raising of a SAR doesn't stop there. The obligation of the FI is also to trigger a number of actions internally, review and investigation of the transaction, trigger review, KYC, CDD refresh, a separate, you know, or renew risk assessment, risk rating assessment for the customer based on the anomalies or suspicious activity that have been identified. And the relationship review, you know, do you want to continue to serve this customer while, you know, not tipping off the customer? So this is where, you know, we need to have a fine balance, obviously. Also, I would say transaction monitoring rules. If you have suspicious activities, make sure that, you know, is this something that you should see for other relationships? Is this, you know, sometimes you come across, you investigate a case and think, actually, that should be a rule that, and I should automate, and I should put the rule as automated in my transaction monitoring system. How many of you really understand one, or how many MLRO actually understand what rules they have in the transaction monitoring system? How many of you review these rules and don't just take the standard rules library that goes with, you know, Comply Advantage, Fenergo? Let's take the standard rules and here you go. You know, you have a business, you have a risk profile, you have specific customer profiles. Make sure that you do adapt and you do create the rule that makes sense for your business, for your geographies, for your customers, as opposed to just take the standard rules that are in the library of the providers, because that's not good enough. I mean, recently, I was shocked. I talked to one compliance officer in MLRO, and he told me, oh, the system is rubbish. You know, it doesn't spit out the right suspicious transactions. I came across one that should have been raised and it wasn't. And he was blaming it on the library of rules from, I think it was called, I think it was LexisNexis. And I said, well, what do you use? So, well, I use their, their rules that they have as standard. And I said, well, no wonder. You need to define and design your own rules, and you have the ability to do so. These are just standard rules, but you need to adapt those to your profile, to the FI, to your business, to your activities and transactions. So make sure as well that you know and you understand what rules you have in place, and you keep refreshing those as you go, because you're going to investigate. You say, that's an interesting scenario. Maybe I need to put an automated rule for my transaction monitoring. And then
I'd say that you keep mentioning Finergo and Comply Advantage, two companies that I know extremely well, but that's just software, and unless it's used at the level that the bank should be using it for, then it's just software. It's like buying, I don't know, Salesforce and not using the whole suite, or tailoring it to your needs. And so you're just paying for a software as a service license, or you're paying a monthly fee, and then you, the bank, think that problem is sorted. So again, technology becomes the excuse, and it's not being applied or utilized or even functionally put into practice. And so there was a point made earlier about training, but it's not about upskilling or reskilling. This is actually a bit on Finergo and Comply Advantage, because they can't just sell this as a solution and then walk away and say, hey, that's a customer paying us X amount per month on a service, because that's not good enough. So yeah, look, Finergo, Comply Advantage, happy unicorn, but it's not good enough.
No, I absolutely agree with what you've said. And that's my illustration was really to flag that and highlight that. It's like, don't take for granted, and don't discharge your responsibility because you're paying a subscription fee and you think, yeah, okay, fine, tick the box, done. Be involved, be curious, challenge, and make it work for your organization. Don't rely on the standard. They're doing already a lot of work.
Oh, and in fairness, Comply Advantage, some of the data sets are old, are inaccurate, are historical, and therefore you're not getting the real-time solution. And I know the company extremely well. I actually know the architecture. So some of the data is not as good as it could be from other vendors, other suppliers, other third parties, or from your own inside institution. So again, some of these technologies can put you into a further siloed thinking, which actually is the exact opposite of the collaborative nature of the solution we need to all put together in a framework for collaboration. But so I'm very fearful that Finergo and Comply Advantage become almost an excuse for the bank to say, oh, we're doing our job. Yeah,
no, I agree. It's like any IT system at the end of the day. It's not my fault. It's the machine is not doing what it's supposed to be doing.
That's not good. That's not good.
That's not good. So yeah, wrapping up on these, operations as well. Obviously, you need to have the right capacity and capability in place, escalation mechanism, your own process internally, internal investigation, internally realizing suspicious activities, and the training that goes with it, obviously. So, last words. Does anybody has anything else to share on the maybe the best practices that we can try and improve on the FI side, while the governments and regulators are putting their act together and coming up with some.
I have to run, but thank you so much. Appreciate that. Yeah, I'll follow up with you, Anne. I'd love to learn more about your company, and Malavan as well. Thank you.
Thank you very much, Dan, for coming and participating. Anybody else? Last few words or comments?
Yeah, and I think the financial institutes and the international regulatory bodies, they should have better mechanism to coordination, the first step, and second, that involvement of AI, because without AI these days, I don't think that we can bring a very big boom to financial institutes. Like we have tried blockchain technologies into data coordination, like Data Privacy Act, also the data privacy and regulations. So conducting through step by step, I'm sure that if financial institutes can move further to AI as soon as possible, included regulators, because the regulatory system still working on the traditional way, on the traditional technologies. And the fintech is not yet adopted by the regulators, but financial institutes are there. They adopt the fintech. So no, the regulator duty and responsibility that it should adopt this technology as soon as possible, that they can have a better system to get better involvement and better engagement through AI. If AI is there, their workload will be reduced, and the mechanism through the reporting channel should be changed automatically. So there will be less risk and there will be less workload and the less human power involved. So I'm sure that if it can happen within 2 or 5 years before 2025, so we will see the big boom in financial institutes. And I'm see there are big events are going on, like we see due to this COVID-19, things that have been delayed, but Central Bank of UAE, Qatar National Bank, and Central Bank of Bahrain, they have taken a huge initiative. And the Saudi Arabia, they are really stepping ahead to adopt that fintech. And I'm sure soon we will see that. But we have to see our financial institutes are really compliant. This is small. See, the SAR is very small thing in the financial institute. Okay, if we see financial institutes has a big wide range, SAR is only one small thing in financial. So if you look the financial regulatory financial system, financial institutes, if you look on head, you will see it's a very big, and SAR is a very small thing. So if only just because of SAR we can say that regulator is not working perfectly or they are facing some issue, that is, I think it's not really fair for the regulatory system. Yeah. Thank you, and everyone. Yeah.
Thank you for your comment, Mohamed. Sundar, you wanted to say something? No, I don't know if anybody else wants to add a last comment.
Okay. I actually not a comment. I thank you, Anna. It was really I just want to say it was really a very good session. It is my first session which I'm attending with Malavan, and it's really honestly speaking, I'm not working, but I'm very much curious into this. I was working as a AML analyst with the UBS Bank. So I took career break anyways, but what I'm doing is I'm attending all these sessions only to just get up my knowledge, what is happening, and is everything is going fine, like that, because I'm very much curious into this. So with by your session and everything, yes, I feel I'm on track. I know what is going on, and I know even now the regulators are they're following the old tradition. So when they come for the new thing, I will be waiting. And thanks a lot for your session.
That's great to keep being aware and keeping being informed on what's going on in it's essential. So you're doing very well. Thank you for attending. Thank you for a last comment.
Thank you.
I'd like to thank everybody. Malavan, do you want to say a few